Hey, XTRM Finance Fam. Welcome back to your one-stop shop for all things finance, investing, and tax-saving strategies. Today we've got an important question that gets tossed around a lot. What's the difference between capital gains offsetting and capital gains harvesting? You might think these two strategies are the same, but trust me, they're not. And getting them right can mean the difference between paying more taxes than you need to, or keeping more of your hard-earned profits. So let's break it down and make it crystal clear. Let's go. Okay, before we dive into the strategies, let's get on the same page about what capital gains are. In simple terms, capital gains are the profits you make from selling investments, stocks, bonds, real estate, whatever. The money you earn is considered a capital gain, and it's taxable. If you've held the investment for over a year, it's a long-term capital gain, which gets taxed at a lower rate than if you sold it within a year. Those are short-term capital gains, taxed as regular income. Now that we're on the same page, let's look at capital gains offsetting and capital gains harvesting. We'll start with offsetting. First up, capital gains offsetting. This strategy is exactly what it sounds like, offsetting your capital gains with capital losses. Here's how it works. Let's say you sold a stock for a $5,000 profit. Congrats! But you also have a stock that's not doing so hot, and it's down $3,000. You can sell that losing stock to realize that $3,000 loss, which will offset your $5,000 gain, leaving you with only $2,000 in taxable capital gains. Pretty nifty, right? So, capital gains offsetting is about using losses to reduce your taxable gains. This strategy works best when you're already sitting on some losing investments. Now let's talk about capital gains harvesting. This is where it gets really interesting. Capital gains harvesting is the strategy of intentionally selling investments for a profit in order to take advantage of certain tax opportunities. For example, let's say you're in a lower tax bracket this year, and you want to lock in some gains at a low tax rate. You might sell off some investments, even if they've gone up, to capture that low tax gain, especially if you think your tax bracket might be higher next year. Another example of harvesting would be selling an investment just under the $50,000 threshold that would push you into a higher tax bracket. By doing this, you harvest gains without pushing yourself into a more costly tax situation. In short, capital gains harvesting is about strategically selling investments to take advantage of favorable tax rates or offset higher future taxes. So, here's where the magic happens. Let's compare the two strategies side by side. Capital gains offsetting is all about selling losing investments to reduce the taxes on your capital gains from profitable investments. It's a defensive move. You're reducing the damage of taxes on your gains by cutting losses. Capital gains harvesting, on the other hand, is a proactive strategy where you sell winning investments to lock in gains at a potentially lower tax rate, or to take advantage of tax breaks like the 0% tax rate for long-term capital gains in certain brackets. It's all about taking advantage of good tax situations now, while minimizing future tax exposure. So offsetting is about balancing the books with losses, while harvesting is about making calculated profits to control your future tax liability. Here's where things get really fun. You can actually use both strategies together. Let's say you're looking to reduce your taxes this year, but you also want to make sure you're not hit with a huge tax bill next year. You could offset some of your capital gains by selling off losing investments in your portfolio. Then, you could harvest some capital gains by selling off winners while staying in a lower tax bracket. This combo approach allows you to maximize your tax savings in the current year, while also planning ahead to take advantage of favorable tax rates in the future. Let's walk through a real-life example to make this clearer. First, an offsetting example. John has a $10,000 capital gain from selling stocks, but he also has a $4,000 loss in a different investment. By selling the losing stock, he offsets $4,000 of his gain, leaving only $6,000 taxable. Now a harvesting example. Sarah has been holding a stock that's been rising steadily, and she's in the 12% tax bracket this year. She decides to sell some of her stock at a $5,000 gain to lock in the low tax rate, before she moves to a higher bracket next year. In both cases, they're reducing their taxes, but they're doing it in slightly different ways. So when should you use these strategies? Here's a quick guide. Use capital gains offsetting when you have losing investments in your portfolio and want to reduce your taxable capital gains for the year. Use capital gains harvesting when you want to capitalize on a low tax rate or plan to sell investments that will push you into a higher tax bracket in the future. Use them together to maximize tax efficiency if you're looking for both short-term and long-term tax savings. And if you're unsure which strategy works best for you, talk to a tax professional. It can make a huge difference. Of course, there are some common mistakes to watch out for. 1. Selling too soon or too late. Selling investments before you've held them for a year could result in short-term capital gains taxes, which are much higher. 2. Not balancing offsetting with long-term strategy. You don't want to sell losses just for the sake of reducing taxes. Sometimes holding onto a loser can pay off in the long run. And 3. Ignoring your future tax situation. Harvesting gains now could push you into a higher tax bracket next year, so make sure you understand how it affects your long-term financial picture. Alright folks, now you know the difference between capital gains offsetting and harvesting. These strategies can significantly reduce your tax bill, but only if you use them wisely. So what do you think? Are you planning to offset some gains this year? Or are you ready to start harvesting profits at a lower tax rate? Let me know in the comments, and don't forget to like and share this video with anyone who needs a little help reducing their capital gains taxes. And hey, if you haven't already, hit that subscribe button for more tips and tricks on mastering your finances. Until next time, stay smart, save big, and keep those tax bills low. Invest wisely and tax efficiently because your money deserves it.